We are live. Good morning, good morning, good morning. Happy Tuesday, everyone. Welcome to Pre-Market Prep. Spencer Israel. I got Joel with me. I got Dennis with me. And I can't believe it, but Snapchat just tanked the market. I never thought I'd see the day where a stock as normal as Snapchat, right? It's not some huge mega cap FANG stock. It's not some bellwether of the economy. It's just a normal tech stock, and it's tanking everything here this morning. So we'll talk about that. We'll talk about Best Buy. We'll talk about Zoom. A lot going on today. We'll talk commodities with Angie Setzer at 8:35. Something's going on with wheat. I want to ask her about wheat. There's some crazy things happening in that wheat market, as is usual. So you know what to do. Smash that like button, hit that thumbs up wherever you're watching. We appreciate that. And let's get this show started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's bring on Joel. Let's bring on Dennis. Good morning, everyone. And how we doing out there?
Easy come, easy go, folks. Big rally yesterday, giving back a lot of those gains today, down 45 and a half handles, 39.26 and a quarter. Not at yesterday's low yet. Let's see if that comes into play. Crude, that's in the green by 38 cents at 110.68. Gold, nice little rally here off on that 1850. We have a gold up 980, 1857.60. Silver trying to find a home in the 22 handle, but can't. Up 18 cents, 21.90. Bitcoin up 220. Consolidation station. Look at that in Bitcoin up 220, 29.235. And Ethereum futures down 1750 at 1960.
That's consolidation. I think that's consolidation to go lower. Those charts look easy to read. Just my opinion. I think going a lot lower. Okay. Get ready for the crypto pain trade.
Trade? Yeah.
Yeah, that's coming. I still think Bitcoin could go to 10,000. 29. That'd be a real shellacking for a lot of bulls.
And that'd be losing 30K. Had a little dip yesterday, and the way it's not regaining 30K. You know how we talk about, support. It comes with support. You take it out, then it comes resistance. It looks like it's becoming real formidable resistance. Let's see. We'll see what happens today. But Spencer kind of nailed it. I mean, of course, you sit down, you look in the morning, you're like, wow, what wrecked the market? And Snapchat, baby. Do we even need the report?
So here's the thing, right? Is they just reported earnings like literally a month ago, right? So they literally 4 weeks ago, they gave the market an update. They're just to recap it, the earnings came in a little bit light, the sales came in light, and then they said, okay, so for the current quarter, for Q2, right? We think we're going to have sales growth of 20 to 25% on a year-over-year basis. Our adjusted EBITDA is going to be anywhere between flat and $50 million. That's what they said a month ago, okay? How much can realistically change in a month? Well, apparently quite a lot, because last night they came out and said, oh, yeah, remember that guidance we gave literally a month ago? We're not going to hit that. It's basically what they came out and said. The macro environment has deteriorated further and faster than anticipated. They are now lowering their Q2 sales and EBITDA guidance below the low end of the previously issued range. So they're not going to hit the guidance that they literally gave us 4 weeks ago. And it just speaks to the tenacity of the macro environment right now. And things are changing, and they're changing quick.
We're trying to get audio back here. Chat's complaining about audio. I don't see us on YouTube, so
no. So here's the thing: we are on YouTube, but we're in a different location than we usually are because we had a technology thing mix up as we went live. But we are live, and we do have audio. So Let's just keep on going. And
Okay, I don't know why the chat's all saying we don't have audio, but I can't find the show either, so we'll keep on going. Hopefully you guys can figure that out in the background, what's happening here.
We're figuring it out.
And I don't know where to find the show, so I can't read the chat. So hopefully they can.
The chat is in StreamYard, where the chat's in StreamYard right there. If you click on comments, you can see everyone's comments there in the chat. And
okay, I mean, here we are. You have a nice rally yesterday, and you're like, okay, well, maybe, it's the washout, 2 days ago, maybe. But it seems like the same thing keeps happening. It's Groundhog Day around here. We start to get some legs. We start to get a rally. It starts to look okay. And then you have another company just come out and shit all over the market. And that's exactly what's happened here again. Snapchat down a cool 30% here this morning. And you wonder why Snapchat? Why can Snapchat knock the market down this much? It's the slippery slope. Snapchat equals, okay, well, that means online advertising might be struggling. So then you run to Facebook and Google. And as soon as you start hitting Facebook and Google, the overall market starts to sell off significantly because there's such big components in the overall market. So, I mean, that's the slippery slope. It's Snap equals, Facebook, Google. Even though we've heard from Facebook and Google, now we're worried about next quarter on them. And they take no prisoners in this market. It is down 91 points, Google, 4.11%. Facebook, even worse, down 7.5%. Pinterest, smaller company, not going to influence the indexes, but it's getting hit even harder, down 13%. Online advertising getting crushed because of what Snapchat said.
And just to further Dennis's point there, you're looking at your top components of the S&P 500 index, and when you have, I call them the top 10 because I combine the Googles. But when you look at Apple, Microsoft, Google, Amazon, Tesla, I mean, these are the big boys, and the two we're talking about are Google and Facebook. I mean, and Apple too falls into a little bit different category. But when those giants are getting slayed, I mean, there's just it's too hard to pick up the slack. There's nothing picking up the slack today, and we're leaking big time. Technically, no one.
We're leaking.
I don't. Nothing to say about this chart. I mean, $10. I mean,
it's so tough. I mean, the only silver lining here is we're coming out of earnings season, so maybe we won't hear anything bad for a few weeks.
Well, that's what you would think.
Stop the bad train of earnings.
That's what you would think. This wasn't even earnings. This is just.
I know. This was just a random warning.
This was the company. You're sort of damned if you do, damned if you don't. Because
you really are.
The one of the reasons why I get what was it, Walmart or Target? One of them. One of the reasons why the reaction to those reports was so bad is because there was literally no inkling at all. Like there was no hints from management that it was going to be a train wreck. So like that's not great when you don't warn at all. But now you're Snapchat and you do warn, and you get crushed anyway. So you're damned if you do, you're damned if you don't. You're damned if you warn, you're damned if you don't warn. It's a lose-lose situation.
It's a tech wreck this morning, and obviously the NASDAQ giving back a lot of yesterday's gains, but just the names that are getting crushed here, like we already said, Google, Facebook, but then it's even spilling over to Amazon, down 51 points here this morning. I mean, they're not even an online, advertiser here, but they're going to nail them too, because again, the slippery slope, it's all related. You go Snap, you go online advertise, start in Facebook and Google, then you start hitting everything. And that's exactly what the algos do. They're punishing everything and asking questions later. And then you can look at other sectors here and you just see like why. I mean, let's go to the Best Buy earnings, which were okay. And the stock had an awesome reaction to it. And here we are an hour later. And it's the same story. You got to sell the rip because it only lasts so long. This thing ticked $80 and now it's red. I mean, this is the same story. Why do I want to own stocks when they go up for like 5 minutes and then go red, and when they disappoint, they go down forever? It's tough to be an investor, man. And I'm, frustrated with it because I'm doing very well trading, but I can't keep up with the losses in my investment portfolio despite still being 43% cash. I can't even make up for the losses in my long-term portfolio because obviously I've accumulated a lot of wealth over the years and it's in stocks. Go to half cash, you think you're good, and then the markets fall like this and you're like, holy, I'm still getting killed. I'm half cash almost.
I don't know if I would call the Best Buy report pretty good. Their EPS missed, their sales beat, and they lowered their guidance. So it was like I mean, it definitely wasn't a great.
Why did it go to 80?
Well, because they lowered their guidance, and the lowered guidance was still within the Wall Street estimate. So
it wasn't bad. And they're
okay,
good
it
enough.
could have been worse. That's the thing, is it wasn't a disaster. It wasn't Walmart and Target. But it certainly wasn't good. I guess it just wasn't a train wreck either.
It goes right back to what I was saying before. There's really no reason to invest in stocks until we start seeing inflation tick down. And the last CPI number did not help us. Obviously, it was even hotter than expected, just slightly, but it didn't help us. And then we got to wait a whole another month for the next number. So if you were playing that way and saying, I'm hands off until I start seeing inflation tick down, you're the best. You're solid. And that's what I think we've got to do. We got to stop trying to buy stocks until we start seeing inflation tick down. And if we got to chase it that day, we do. But I mean, in the next inflation report, if it doesn't show up again, it's going to be another month of pain for stocks. The root of all the problems is inflation. We see it. You know, I'm out there this weekend and I'm looking at the prices of stuff in Toronto, and I can't even fathom the prices of stuff. I mean, yeah, there's, step up pricing and, some luxurious stuff. And I tweeted the $1,800 toaster, which was probably $1,500 toaster before. But I mean, just in general, you go into places and you're like, how in the hell is that much money? Everything is so much more money than it was a year and a half ago. And it's got to equal some demand destruction. We've got to get prices down into at least coming back in and stop going up. We got to get them to stop going up, first of all. That's the first, thing. And until that happens, this market's in a world of pain because the consumer is going to say screw it, and that is going to show up in these earnings reports, and it's already starting.
I went to a local burger place near me. It's really small. It's basically like a burger stand, and they have the menu taped up on the outside. You walk up to the window, and every price was crossed off and raised. Like they just took a Sharpie.
Spencer, where'd you go?
Greens on 12. No, on Orchard Lake. Sorry, Greens on Orchard Lake. It's in Farmington. Anyway, they just took a Sharpie. They crossed out every single price, and they raised it all like 20 cents. Should have taken a picture of it, but
boy. Just going back to the Best Buy here real quick. Yeah. I mean, you guys see what you see what I see. The spike. Forget about that $80 I tried to get in the gap. What a great psychological number. But you kiss 69 in the pre-market, and then go look at the last two daily lows: 69.07, 69.36. So. Let's see if it gets there today. If it can hold and turn up, and you have a potential low there. The longer it takes to get away from 70, then your next monthly. I don't even want to look at the next monthly.
You just caught all the algos. The algos are all caught. They got to because they were buying for whatever reason. They're crazy. But then you go, okay, we don't even worry about Best Buy. Go to Abercrombie and Fitch, ANF. We don't even have to worry about Best Buy. This is another one. We're down 25% ANF. I mean, this is just this market. Every freaking day, there's a stock that falls 30%. I mean, this is now there's two today, Snapchat and Abercrombie Fitch, completely different industries, completely different story, online advertising and apparel. I mean, you get two disasters today. So now you're going to see all your retail stocks get hammered here, anything with apparel again. I mean, it's tough to be an investor in this market, and it is frustrating. And, as well as I'm doing trading, I'm frustrated as an investor because I'm like, you think, okay, well, maybe you can nibble your toe, you can nibble a bit, and you get your toe bit off. So I just think the average Joe out there who's like, okay, yeah, I'm inclined to buy the dip here on something. It's just not working. Here we are, another story. Give us the numbers for it, Spencer. ANF. It's a mess.
Yeah, I love the Benzinga news desk because whenever there's like a big EPS miss, they automatically will just put may not compare just in case because it's such a big miss that there's somewhere. But in this case, it actually does compare. So the EPS was that they reported a 27-cent loss versus an 8-cent gain estimate. So that's a miss of 30 some odd cents, right? I mean, that's a big miss on your EPS. Sales came in a little bit higher as well. They guided sales for the year flat to up 2%. They guided sales for the current quarter up low single digits. But what a surprise earnings miss when they were expected to make money, they actually lost money on the EPS basis last quarter.
Value traps here now all of a sudden. I mean, you look at this, and here's the stock. This $48 back in November. We're $20. Stock's off 60% in 6 months. Investing is so much fun. I mean, you come down here, you're $20. You think, okay, I'm going to buy this, but you know what happens? You buy it at 20, and then it's 19, and then it's 18, and then it's 17. Buy the dip has just been assassinated in earnings. It just hasn't been working. So I'm not coming in being a hero and saying they're going to turn it around, because I don't know if they are going to turn it around. I think the same story. I think I'm done. I think literally I'm done trying to invest in stocks or buying stocks until I start seeing inflation tick down in the data.
You said that before, Dennis.
In the data. I know. And then I go and I'm like, I was 50% cash, and I go and I buy 3-4 stocks. And I'm like, and they're all crap. I mean, Take Two was okay. It's actually, I'm up in that one. But
what's going on?
Three out of 4 stocks that I bought, I can't remember what it even was. I added my Disney. That was bad. Take Two was okay. I bought some Kohl's. That was horrible. I mean, I should listen to my own, I got to listen to my own show. And just don't buy stocks until you start seeing inflation tick down. So I guess we're just out until the next CPI data.
1869 is your next monthly low. And I'm just giving that as a reference point. That was back in December of 2000, coming out of COVID. That's the next monthly low. You don't want to know. That's down at 1405. So 1869 in reach today. Not sure about that 1405. That was your November 2020 low.
What a mess. What a mess. Get us out of this mess. What do we do?
I don't know. I'm really starting to scratch my head. I saw a Twitter thread this morning. I think it was just like a person theorizing, like, how can there not be just an epic amount of credit card debt or soon to be credit card debt right now, right? Because I know
people aren't buying stuff, so they can't afford it.
Yeah, but they are. They're buying the things they need to buy, like gas and food, which are going through the roof.
And then they're out of money, so they can't buy anything else.
Okay.
But not going and buying that new wardrobe, at Abercrombie and Fitch, because I got no other income left after I buy my food and my gas. That is the truth. That is what's happening here. It's going to be demand destruction across the board because people got to buy gas, people got to buy food. You don't have to buy a hell of a lot of other stuff.
That's from the consumer side. The Snapchat guidance indicates that from the business side too, because the Snapchat thing from last night, the implication there is that fewer companies are spending money on advertising. That's how they make their money, right? It's all
they get it,
right? So
why in the hell should Ford just go nuts on advertising here when they're not going to sell these cars no matter what? We got a $95,000 pickup. You want to come buy it? You want to come buy it? Canada,
maybe
$95,000 new F-150. Let's advertise that thing. We got to advertise more, folks. They know what the problem is. The problem is they're building the cars. They're too expensive. So you can advertise all you want. Everybody's like, are you nuts?
All right, that sounds like a Ford problem. Not so much.
That's a lot of problems for a lot of things right now, though. Input costs are up across the board. Labor. I mean, the restaurants are getting squeezed. They're getting the hell squeezed out of them. I was in Toronto trying to get, we were at a breakfast place. They had 2 waitresses trying to serve everybody because they can't hire anyone. Yeah. Big help needed, but nobody's coming to help. So now the service in there is crappy. So I'm like, well, I don't even know if I want to go back to that restaurant because the service was crappy because they didn't have enough waitresses. So it's tough.
Look, there are many conflicting signals out there because the labor market, like Dennis said, it still really hasn't quite caught up from the pendulum swing. And on the other hand, unemployment is very low. And yet, I can't imagine that household balance sheets are able to stomach that much more of this. I really can't. Because it's been wages have been rising, but not to the rate that inflation has been. So that can only go on for so long before people really start to feel pain. So there's just conflicting signals out there. I really don't know how we get out of this.
Well, what's this path? The BMO analyst on CNBC last week. We're going to make all
time.
All
right. Come on. All right.
What's the path?
Come on, guys. Come on. We got to. Well, let's look at what can.
Let's be real, Joel. I mean, whoever has been.
You yelled at me when I talked about this a couple weeks ago. About the market always coming back. I mean, we need to get inflation under control.
That's what it is,
right?
We need to get that's all we need to do. Get the inflation in check, and other things will start fixing themselves. We got to get the inflation in check.
That's the hope.
Okay, and I'm not. I know we try and take things like on a we're trying to project out, right? That's what we do on the show. We also talk about some short term trading. I'm not happy the market's down today, right? Obviously, portfolio is going to take a hit unless it rebound, but at least we got a setup now that we can look at. I don't like when we have these
What's the
70.
setup? Give me the setup.
The setup is, well, I'm not going to talk about that low from Friday because hopefully we don't get there today. We had a nice rally.
Better not.
I mean,
some people, kind of missed the rally, and today could be like a back and fill day. Maybe there is some bigger money out there today that's going to come in. And whether I'm just going to use 3,900 because we're pretty close to that. 3,900 is about halfway back of that little rally. It was also Friday's close. So, we hold that, build a little base for a couple days and turn up. If not, if they cut through that like a hot knife through butter, then we're in big trouble because there's nothing down there. We took out those lows at 38.50 and a long way to go. So let's just, things are not looking good right now. We know how the market, can turn around. But
it can.
Let's
We're
see.
oversold on a lot of stuff. That's a positive. Maybe a lot of this is priced in, but I don't think you're going to get sustained buying until we get that inflation data. When is the next CPI number?
June 10th.
That's your day.
Yeah.
June 10th. It could be just chop and slop and getting hit and selling rips until June 10th. Then maybe we'll tick down. Get it ticking down, and then I can build a bull case off of that. Until inflation gets there, I can't build the long-term bull case.
I agree.
So don't ask me when I'm going to employ the last 43%. I wish I would have employed the other 7% in my long-term portfolio. The trading is great, though. Don't kid yourself. If you can short stocks, you can trade market neutral. There's lots of volatility. There's lots going on. There's lots of money to be made. In the long-term investment portfolio, if you're just long only sitting there, it's tougher.
Actually, you know what? There's a good article from Jason Zweig, who's another one of my favorite finance traders, and he wrote all about how to psychologically trick yourself into buying the dip, and because we always talk about, don't buy the dip, or at least in this market, right? Don't buy the dip, or it's easier to get out than it is to get back in. Later on, I'll link it in the chat. I thought it was a pretty good article. It's just a psychological tricks to help yourself. But speaking of selling the rip, though, what about Zoom here this morning? Because that I was very surprised. I wasn't in front of my desk when the report came out, and Aaron Bree came over. He says, "Look at Zoom," and I was like, "All right, I'm gonna guess Zoom's at like $80," and he was at like 105 when I guessed that, and I was like, "Whoa!" Anyway, the report last night, I guess it was okay because their earnings per share beat, their sales beat, their Q2 sales guidance came in above estimates, their EPS guidance for the quarter came in above estimates, their sales guidance for the year came in line, and their EPS guidance for the year was a beat. Just looking year over year and all that jazz. I mean, their sales growth is slowing. Of course, that's not really a surprise there. We knew that. Actually, I think it was their slowest sales growth on record.
Yeah, it was. I saw that.
But the expectations were low. They came in above the low expectations.
Yeah.
And I mean, the stock ripped on it. Unclear to me if this was if the turnaround here was Snapchat driven or if it was just that's Zoom for you. But and in any case, it gave back almost all his gains. So.
I mean, this is the story. And Best Buy, Zoom are the same story here. The earnings were okay. They rip them because they're not disasters, because they're so used to seeing disasters, the algos. And the algos are wrong again. On the whole first candle, they're buy. Who's running these programs, man? They're just cash-burning machines, these algorithmic programs that are buying on these earnings reports, because then logic comes in, the human comes in, says sell. Money manager comes in, sell. Zoom's up 10%, sell it. And then we're right back down. And here we are, haven't even opened yet. And we've given it all back. Tough market, man.
Gave you a nice look at a daily high, though. May 5th, it got to 107.36 and got through it just a tad. Got to 108 and then big reversal. Trying to hold in here right around 91.84. Well, We'll see if the top of the range from yesterday can hold. That's 90.25. And then you have a couple lows, well, 85.57 to hit that yesterday. But on off the report, let's see what happens if it gets down to the top of yesterday's range. And on your way back up, man, you're gonna have to focus on your other daily highs now because the next one, Friday's high was 94.85. You might get a look at that one.
Those are your headlines for the day, right?
These are not the stocks that I still feel like the Cathy stocks have already been punished. So if you're trying to find a silver lining, they are still holding up. So the Cathy portfolio was rightfully punished for a long time. I feel like it got overdone the day I tweeted out on the Thursday. And you're still seeing every time we rally, it's these stocks trying. It's these growth stocks that are trying to lead us out of here, because they've been beat up and there is still the potential for some growth in here. So I don't think you're coming in here and this is the easy money on the short side. And the easy money on the short side's been made in the Cathy stocks. It's now the value stocks. It's the stocks they haven't hit yet. Those are the ones that they're going to come for, I think. I think they're coming for them. Obviously, we don't know anything, but I just think they're coming for everything eventually.
Interestingly enough, much was made about all the inflows, the continuous inflows into ARKK. It actually hasn't had a day of net inflows in a week, or more than that. May 16th was the last time that ARKK had a day where it took in more money than it lost. So maybe this is the start of actual outflows with the rest of the ARK family. ARKK for so long has been this bellwether, ETF that just takes in money like nobody's business. Maybe that is starting to turn here, although the data is a couple of days delayed there. Something to keep an eye on to just use as a proxy for consumer buying demand, or retail buying demand, I should say. So
Another day consolidation there. Holy mackerel! I mean, this is 1, 2, 3, 4, 5, 8 days in a row between between 40 and 44. So you have your levels. See if you can break above 44. You can get bullish. Breaks below 40, then I mean it's not going to go straight down to 35, but that's your next daily support level.
So if you're looking at any tech stock today and it's down, I do think it is fair to attribute this to Snapchat, as Dennis said earlier, because if you think about it from a chain reaction point of view, Snapchat impacts Meta, impacts the other mega caps, impacts everything else, right?
Yep.
Especially the trade desk. I was very surprised to see TTD down. What is it down this morning?
Online advertising.
Down 11%, almost 12% this morning, right? And I was like, could that really be?
That's Snapchat.
It is. I think it is.
It is.
I think it's
question though. Okay, so this is pretty ridiculous that Snapchat warns and we're hitting all these stocks down, even the Facebooks. Do you think that, not that there's any buying opportunity with inflation the way it is, but I mean, if we were not in this horrible 2022 environment, I'd be saying, okay, Facebook down 16 points off of Snapchat. This is maybe dumb. It's going to re-challenge. It's not going to re-challenge the April low of 169, but it's taking out a lot of lows. Maybe there is an argument to buy some of these. I don't know if it's Trade Desk, but some of these, Google. Maybe I already own Google, but maybe there's an argument to jump in here long term. I don't know. I'm just saying I think it is overdone that this Snapchat caused all this. So rational money would say maybe we should buy this dip on this, but I just got burned buying the dip so much that I just can't do it.
Hey, gap fill, Facebook. If you don't like, we talk about gaps being filled. I mean, that's something. You had what was that? Earnings day, I believe. 181.21 had a big old gap to 192.90, coming back down into that area. So The problem is if you're buying at 180, your next daily low is the low of the move at 169 even. Low close of the move, if you want to hold out for that, is 174.95. But you're right. It's filling the gap. Just getting slammed. But it's we don't know what the fallout's going to be until you see it. I mean, earnings season. Think about a long ways away from now.
I mean, just logically think about Toronto Dave making a good point. Snapchat is not a good indicator of macro. His daughter stopped using Snapchat a long time ago, and all our friends have drifted away from it. I think I agree with that. I think this is a Snapchat problem. What they have, we got TikTok, or I can see, my wife uses TikTok and then go on Snapchat.
TikTok.
I mean, I can see that this is probably a Snapchat problem. So this is kind of irrational selling, to be selling the Googles and the Facebooks as much as they are off of this, which makes me inclined to buy it. But, I just set off the show. I'm not going to start buying stuff again until we start, getting inflation in check. So I think, I think if you were 100% cash and you were buying into Google, I don't know necessarily Facebook, because Facebook might be a value trap, but I think 5 years from now you're going to be happy. I just think 5 weeks from now you're probably going to be lower. The stocks just keep going lower.
Yeah, that's a good point, Dennis. So when I saw the Snapchat thing last night, like my first reaction was just, this is TikTok. This is TikTok.
This is TikTok.
This is TikTok. That's all this is.
Yeah,
this is TikTok, right?
Yeah.
It's less a commentary on, the macro environment. It means nothing for the macro environment. But it is a commentary on TikTok, and I will say, Snapchat, they try really, really hard to, once a day, they try to get me to open their app, and I almost never do it. So they send me. I have a my notification, like my red notification thing, like it tells you how many things. I was up to like 10 the other day. I had like 10 notifications because I refuse in principle to open the app just so I can be counted as a monthly active user for opening the app for 5 seconds. Get real. I mean, yeah, this is
TikTok.
The TikTok is what this is.
It's TikTok.
Oh, yeah.
Where would Twitter be without Elon Musk, Joel? Where do you think Twitter would be if we didn't have the potential of the Elon Musk bid? 25?
30s?
Below 30. It's 36 right now with them.
Oh, all right. 20s?
Yeah, I think it's like $25 stock. Like if all of a sudden this deal falls apart, I think Twitter's like 21, 22. Yeah. Because you know what? Like with Pinterest and with Snapchat, falling apart here, Pinterest obviously following suit, Facebook following suit. The only reason Twitter's only down 3% today is because there's still the potential that, hey, this deal might get done. I think there's very little chance this deal gets done at 54, but I mean, it's holding up well because obviously the Musk bid. But I think if that wasn't on the table, if for some reason it's over, Musk is not buying this company, I think this thing's under $25.
Boy, oh boy. Where were we? First things first, I would say the area where it was at before all this started actually was 40, right? When it jumped out, but I don't know, 31.30. That was the low of the move. That was your February low in Twitter. But there's been no news on that front, huh? Nothing. Just posturing, right?
It's just posturing. All right, real quick question that I want to address, and then we'll bring on our guest from Vegas. Question: when Nintendo splits, will it split in the U.S. or just Tokyo? So the answer is, I believe the answer is, it will split in both because the U.S. ticker for Nintendo, it trades OTC, and it's not like even like a Nintendo, necessarily like a Nintendo sanctioned thing. It's like an ADR, some bank somewhere created it as a reflection of the true Nintendo price over in Tokyo. But that true Nintendo price in Tokyo is about to change because they're doing a 10-for-1 split. So that split should be reflected in the NTDOI ticker if you trade in the US. But sometimes these ADRs can be a little bit
funny,
but it should reflect in the
what's the symbol that has a lot of symbols in it?
Yeah,
right?
TDOY. It is actually it is actually, for an OTC stock like that, it is somewhat
trades
liquid.
A bit.
Yeah, it's somewhat liquid. It does trade a few 100,000 shares a day. It is the only way for U.S. investors to buy Nintendo without having to create a brokerage account in Asia or whatever, and do that. So it should reflect in that price. But good question. All right, it's 8:35. Let's talk commodities for a second. Let's bring on Angie Setzer, a longtime friend of the program. She's the co-founder and partner at Consus ROI. And here she is. Angie, good morning. How are we doing today?
Good morning. Good. How are you?
Doing great. What's
First
going
question,
on?
I want to throw a quick question in there. What's that name? Consus. Where did you come up
Consus,
with that?
it actually was the Roman god of protecting grain and storage. So yeah, one of the things that we work to do is really help our farmers understand and learn how to trade the market like an elevator would. So like taking all of our experience of being in the elevator industry and helping the farmer recognize, okay, these are the things you pay attention to in basis. These are the things you watch in spread. And this is how you make your storage pay for itself. So it just made way too much sense that we would call it Consus.
So what's going on in commodity land? Let's start with the grains here. I've been reading about wheat, and last time we had you on, we were all freaking out, and you talked us off the ledge. So I'm reading about this wheat, this drought over in India, and this wheat shortage there. Tell us about that.
So prior to probably February 24th, no one really cared what India did with their wheat because for the most part, they kept it at home and they were happy and we were happy and the world remained fed. But about the 1st of March, India kind of came out and said, hey, guess what, guys? Like, good news. We have another huge crop, another record that we're expecting. We've had several records in a row. We spent a lot of money on modernizing our production practices and modernizing our government reserves and all of these things. So we can help you out. We got you. We can get 10, 20 million metric ton of exports into the global market. And no one was expecting that to happen. And so that really kind of calmed everyone down. They're like, okay, India's got this. Most physical traders are like, India absolutely does not got this. First of all, the heat and dry weather started about mid-March, which was earlier than normal, but pretty exceptional. It was a record-setting drought. And for two, they just don't have the port capacity to meet those types of exports. So 7-8 million metric ton, maybe 10 million metric tons, about the max that most folks anticipated. A lot of folks were saying 5 million. But the market, again, tends to be one of those things where right now you'll see physical traders, cash traders, folks in the trenches actually moving physical product like myself saying one thing, and others analyzing numbers and maybe, not to be rude or what have you, but I call them, commodity grain tourists right now. Like they come with a fanny pack and a camera and they're taking pictures of their trip through grains that tends to last during times of inflation, and then they'll forget that we exist. And but everyone just kind of freaked out again when India said, wait a minute, oops, our bad. We have 6 million metric ton less of production than what we thought, and we're going to go ahead and make sure that we don't just send grain to whoever wants it. We're going to make sure that whoever gets our grain, whoever gets our wheat, it's precious. There are bushel babies. They're going to go to places that need it. Excuse me, just dropped something there, but they're going to go to places that need it. And we're going to go ahead and negotiate that government to government. And so it kind of became one of those things to where we're seeing some interesting dynamics in the global market structure to where some of these countries that are producers are starting to pair up with these countries that are in need. They're importers, and they're creating these relationships. One of the most, prolific in this, I think, is going to become India and Egypt, because Egypt imports about half of their needs, about 10 million metric ton a year. And India has spent a ton of time really kind of building out that market structure. And so even on the day that they announced that exports would be restricted, they said not what we put together with India. With Egypt, excuse me. We're still going to figure that out. And so we're watching a really interesting dynamic in the wheat market right now where you could say supplies are plentiful. There's still a decent amount stuck in Ukraine that can't move. Russia is producing what appears to be a record crop that is limited in movement by sanctions, obviously, and who will do business with them. India is kind of stepping in, but we're really looking at a world now where we have the supply, but we may not be able to move it to where it's needed. And so it's an interesting dynamic, and it's resulting in a lot of folks kind of stepping away from the wheat market that may be traditional participants. And you're seeing some really volatile moves as a result. Last week, we were like a 60-cent average daily range in wheat. And normally 10 cents, you'd be like, oh, I wonder what happened. It's a 20-cent wheat range, and we're 60 cents a day right now.
All right, there's a lot there. Someone in the chat wants you to comment on the wait, did I read this right? Locust swarms.
Oh gosh.
Wait, who had this? It was Young Money. Angie, can you comment about the upcoming locust swarms and the effect they have on wheat prices?
If I were to get a dime for every time I've heard locust swarms will impact grain production every year, I would have $1.80 because I've been doing this for a minute now. So I'd have $2. I don't know. It'd be a while. It's just one of those things. It'll impact. Is it widespread? Maybe. I mean, we have monkeypox now. Like I could wake up.
Okay, so all right, I got it. I got it. We have bigger fish to fry.
Yeah.
And I got it. Okay, great. That's good to know. Next time I see a thing about locust swarms, I'll just remember this conversation. All right, what else do we need to know about right now in the commodity complex?
What don't we need? I mean, right now we're looking at, or what don't we need to pay attention to? I mean, I think we're looking at a global reallocation of supply versus demand. I think we're seeing a realignment of potential global relationships when it comes to trade. We just saw yesterday China approve Brazilian corn for import. So prior to yesterday, Ukrainian corn and U.S. corn were basically the only two major approved suppliers. Now they were moving some grain out of Argentina. There's been stories of, arbitrage taking place where maybe they buy X corn and it ends up being shipped out of Brazil. But yesterday we saw an official agreement between the two countries that could open up the door to 10 million metric ton, which is about half of China's projected imports. They could come out of Brazil. Brazil's production continues to grow, even with the drier conditions and some reports of spotty frost. It appears like they'll have a crop that is about 25 to 30 million metric ton bigger than last year. So that's a reasonably large corn crop, comparatively speaking. So we're watching that. We're watching U.S. planting progress. We're finally catching back up to normal. That's been real slow due to slow and wet and cold conditions across much of the Corn Belt. So now we watch weather. We watch weather and we watch movement in grain, and we hope that Mother Nature decides to look upon us favorably, because we definitely need, decent Northern Hemisphere crops, to be confirmed over the next 6 months.
You kind of were leading into my question there. We're on with Angie Setzer. She's the goddess of grain on Twitter. Great follow. All right. So last time you're on, I made the extra phone call because you said something and you made me feel okay regarding we have enough food from our farmers in the U.S. to get us through, and everything's gonna be okay. And the conversation we had was the same. You confirm that. Are you still in that mode? I mean, obviously farmers are going to have to make adjustments. I saw someone said that, they're planting wheat in Missouri for the first time. I mean, obviously that's going to take a year, 2 or 3 years for a transition. Are we still okay on that with, us being, self-sufficient on that? And then also you went into the weather. What there's droughts, any major things, any crop reports we need to keep our eye on?
So, kind of the first question there, are we still able to maintain some of that self-sufficiency that I talked about? And yeah, definitely. Price will do some amazing things. I mean, they've planted a lot of winter wheat in Missouri in the past. You could see someone potentially looking to plant spring wheat to try to take advantage of the futures prices being higher, but you're going to be hard pressed to find a physical market. Like, you have to be able to find someone that's looking to mill spring wheat to make it happen, for one. And for two, protein may be an issue in Missouri and stuff like that. I would caution right now just the sense that there are a lot of anecdotal stories out there that, some folks may start as a joke, and I've seen it in agriculture where they're like, oh, haha, this is obvious to everyone in agriculture that this isn't true. Like last year we saw a report of China buying U.S. topsoil. Didn't happen. A report of the government paying folks to tear up crops also not happening. I mean, there are some stories out there that are just kind of being pushed around the rumor mill because everyone's paying attention and we're all freaked out. But yeah, self-sufficiency is still good. The amount of protein, looking at your poultry, looking at your hogs, looking at your cattle, that inventory is high. Looking at our overall grain on hand inventory is decent. Is it burdensome? No. Is it where we're running on fumes and potentially running out tomorrow? Also, no. We're kind of in the middle. Now, like I said, weather will be very important this year. Right now, we did see relatively strong planting progress over the last couple of weeks. Initially, at the start of May, we were the lowest that we've seen in a few years, lowest since 2013. As a result, the USDA did lower corn yield in their last number, what they're expecting for the crop year coming up. But we're still looking at a relatively large crop. June weather looks to be conducive to production. There may be some areas that run into, planting delays and potentially even are unable to plant. The Red River Valley up in North Dakota is one of those areas that could potentially have some big issues. And that's going to be, like sugar beets and spring wheat that'll be impacted there. And so, like I said, weather-wise right now, we're kind of trying to figure out what's going to take place. La Nina is starting to break down or weaken a little bit. It does appear as though she's going to hold on with a potential third year of La Nina, which will keep that risk underlying because it tends to impact South American weather more than anything. The Southern Plains are seeing some much needed rain, but they're still looking like they'll turn dry into the summer. So we'll be watching it. Right now, I would say, our first big chunk of risk, we're 72% planted on corn, 50% planted on soybeans, so that big first huge risk factor is kind of starting to fade. But we'll definitely be watching what happens over the next 10 days to 2 weeks and get us a better feel potentially for what kind of acres we'll see at the end of June when the USDA updates their acreage, their planting intentions.
I rifled through the grains here, just looking at the charts, and the only one here that has a potential top is the soybean market.
Mhm.
Beans in the teens here. I see that 4 monthly highs, including this month, in the right around $17 a bushel, 17 to 17.25. Is it just gearing up for a breakout here, or is there some kind of dynamic in the soybean market where they're just unloading here and they're just going to keep selling 17 and a quarter till the cows come home?
Right. I think you see that. Yeah. I think we're looking at, kind of a sideways range. Like we're locked in a bit of a range. We get to the high side and the sellers pound it. We get down to the bottom and the buyers come in and buy that dip. And I think you see that continue in soybeans for a while. Seasonally, we tend to see the market trade sideways, excuse me, into the end of June, until we get a better feel, and even in the middle of July there for soybeans, just until we get a better feel for production. August is an important production month for soybeans as a whole. So we'll have that risk premium kind of stay in place a little bit longer than what we would see for corn. But right now, we're really watching just to see what Chinese demand will continue to look like. And it appears like the bulk of their summer purchases are covered at this point. So you could see soybeans relax a little bit.
All right, a lot to discuss here. Always great to hear from Angie Setzer. She's the co-founder and partner at Consus ROI. You should follow her on Twitter. Her handle is at the Goddess of Grain. I'll even put the link in the chat for you, make it easier to find her. Angie, always great to talk to you. Thanks for joining us, and have a great rest of your day.
Thanks for having me. I'm looking forward to the day when there's not so much to unpack again.
I would hold your breath for that.
I won't. Yeah, I'm not gonna. But thanks for having me. It's always great, you guys.
All right, I just dropped a link to her Twitter in the chat. She's a great follow on Twitter. Can't recommend that. All right. Hey, you know what I didn't get the chance to ask you guys about is the banks yesterday. Did you guys see the banks yesterday?
Jamie Dimon rally.
I mean, I don't know the last time that the XLF led the market. I'm sure it's happened recently. It doesn't happen. What'd you say? May 4th? Okay, May 4th was the last time it happened. Thank you, Aaron Bree. So it doesn't happen every day to see the banks rip like that. But Jamie Dimon, speaking, you had several bank CEOs speak as well at Davos. They're all saying that their stocks are undervalued. Go figure. I don't
Did
know.
Jamie buy some stock? Did he buy some more stock, or is just his
No,
comments?
I don't think he bought some more stock, but he talked up his bank, and he talked up the financials, and he gave a bunch of bullish comments.
It was a big move in the banks yesterday, and they did lead. And you did have a value trade going on yesterday. Like you saw stocks like Deere really bouncing back after the disappointing earnings, even Caterpillar. You had the value trade happening that was off of Jamie Dimon. They started buying the banks. They started buying all the value stocks. So you did see that value trade happening yesterday. Would I be a buyer of banks in the pullback? I think it depends on your time frame. I already bought some JP Morgan, obviously higher and not good. I think if we go into a recession, it'll be tougher times for the banks. So maybe that's what the market is really pricing in. That's why when you look at these banks trading with these higher dividends and low PEs, you think, oh, how can I go wrong? But is it a value trap? Because you go into a recession, it's going to hit everything. Small businesses, hits the banks, hits everything. So, I mean, that's what I think the market is pricing in is the risk of recession, which is very high. But with that being said, the banks are dirt cheap. I mean, and you're buying banks, you're not buying like a Snapchat that could potentially go a hell of a lot lower. There's eventually a floor under these banks. I don't think we're going into another financial crisis where we're going to have liquidity concerns. I would hope not anyways. So I think on pullbacks here, I actually would be a buyer of the banks.
Wow.
But again, I need the inflation data. So I put them on my shopping list. And when the inflation data is not that bad, then, you're going to run into some of these stocks.
All right, we got about 9 minutes left in the show. Let's do some ticker time. Drop your questions in the chat. We'll see what we can cover. I saw somebody dropped Woof in there, WOOF. They had earnings this morning. I didn't even look at that. Let's see what Petco said. Petco, EPS beat by pennies, sales barely beat. Guidance for the year in line. All right, everything basically in line with the estimates there. Woof. So it's up.
It was fine.
Yeah, it was
They've
fine.
hit the stock from $22 a month ago to $14, so it's getting a little dead cat bounce here. Probably a bounce to be sold.
Probably.
You're holding up. You're up $1.40, 10%, decent volume. The second lowest high the stock ever made was 1675. And that was on Friday. So there's your target. Couldn't quite get there in the pre-market, so that's a little bit of a concern. But above that, things open up in the 17 handle. If you're looking for support, you want to buy the dip on this one. Close near the low of the session, and that was a all-time closing low too. So 1460 was that close, but maybe with this report on a pullback, maybe buyers potentially step up to 1511. That was your second all-time closing low, and that was made on Friday.
Oh, before I forget, here is the calendar for tonight. Not really much in the way of earnings. Nordstrom, Toll Brothers, Intuit, kind of your leaders tonight. There are going to be some much bigger names tomorrow on Thursday, so this is sort of like a weird lull in the week there. Nordstrom is probably going to be your headliner, especially with what's going on in retail land, so just keep an eye on that. Somebody asked about someone asked about Dick's Sporting Goods. They're on Thursday, right? Is that I think it's on Thursday.
Killed, man.
I mean, hard to be optimistic, right?
Value trap too, Joel. I mean, the P's been low on this thing, but we know it was elevated with COVID. This was a COVID stock. We're going out and doing things, and we're giving all that back. I mean, every COVID stock is giving it all back. So is it out of the realm of possibility? This goes all the way back to 60 where the party started. Nope, not out of the realm of possibility. If the consumer's slowing down, they're maybe not buying this stuff here either. So I think there's value here. I think there's value in a lot of retail here, but it's been just like you need that inflation data. You need to get the overall market to stop selling before these stocks stop going down.
I remember they warned a while ago. I don't think it was. I think it was two prior reports. I remember them coming out with a pretty stern warning. Getting shellacked because that's what they're doing to retail today. You have your next monthly low is 71.17. That's may see that today. You can use yesterday's low as if it gets above 73.66, maybe you get a look at the close. That made a low close for the move yesterday at 75.27.
What about Toll Brothers here? That reports tonight, and these home builders have done they've done nothing. Like Toll Brothers has done nothing here.
Look at that.
I know.
They've given back the whole COVID gains too.
Yeah.
I mean, they're value traps. They've been value traps.
February 2020, the stock was at $48. Right. I mean, we're right there.
I just feel like I've got the inside scoop on these things. I'm building a house, and I'm like, I would never do it again. I mean, it's like ridiculous, the prices of everything, and people, they're going to have trouble getting new contracts. The people who are building the houses are going to finish their houses. But going forward, it's like you got to sell these houses. Now they're 25, 30% higher, than what you were quoting a year and a half ago. And are people going to pay it? So I get very concerned that it's going to slow down for them too significantly, because it's tough to envision a recessionary, higher interest rates, material costs, input costs all going up on you. People saying, oh yeah, let's go build a house. So I'm out. I don't want to own any home builders. They're all value traps to me. Like maybe the earnings will be fine. I don't know, because the expectations are low. It's been hit, but rightfully so. These things all deserve to be hit, and they have been hit. So is there a point in time where you'd be a buyer? Maybe, but I don't see any, real sign of a turnaround in housing. I mean, it just doesn't make any sense that they would have a turnaround. So common sense says no, thank you.
Rob made the same. I look at that, I'm like, what a weird chart. I mean, the time that it spent between, well, you could go 45 to 48, but really between 46 and 48, man, some algo or some big trading system had that pinned. So I'll just go with that. The 48 looks like pretty good resistance, a couple pokes above it. And then on the downside, you got a range here, and that's like from 45.67 up to 46. So one day it's getting, it spent 2 days out of that range here, and it spent 2 days out of that range here. But that's the way it's been trading since mid-April. So Bulls want to get above 48, hold 48, keep on going. The Bears want to see it get it under 46, stay under 46, and take out the low of the move just under 44.
It's just a good lesson in value traps. And you see OP 6, 7, how can I go wrong? Well,
right.
when they're
why is it
earnings,
so cheap? Well, ask yourself this. Why is it so cheap?
Exactly.
Right.
I mean, there's so many value traps out there where these earnings were inflated. People were going nuts. Let's buy, spend money. Let's build a home. Let's do things. We're never going to go out again. Let's get in our home. I mean, the world is reopened. COVID is past, at least for the most, it's not killing everyone. So, I mean, the world has just changed back to normal. And we still have some of these stocks that were really inflated prices, but they've got hit hard because they're getting hit on input costs for sure. And can you pass it through? They're trying. But I think you're going to have demand destruction in housing.
Yeah, it's almost like when you're at the store and you see a great deal, you got to be like, wait a minute. Something's not right. Why is this thing so cheap? Oh, it's defected? Oh, it was already opened? Oh, it was a bruise? You know what I mean? You gotta think about those things. All right. No, we did not cover Advanced Auto Parts yet. They actually reported it as well, and I totally forgot about that. That was last night. They reaffirmed their guidance for the year. All right. Hey, that's about the best news you could get, right? A reaffirmation of guidance in this kind of I guess this is kind of retail-ish in a way.
People aren't in Advanced Auto Parts could be okay because people aren't going to buy new vehicles. And they're going to buy new vehicles. They got to fix their old vehicles, right? So maybe that's a little bit of a bull case that, people are going to be driving their cars longer. They're going to need more auto parts and they're going to need to fix more things up. So that's the bull case. The bear case still is just this chart doesn't look great, Joel. I mean, I'll throw it to you on the technicals, but it looks like it's in the middle of nowhere.
They got it below the low of the move by quite a bit, but this is a thinner stock. 2,200 shares have traded, but you have a reference point here, 176.75. That's the lows from Friday and Monday, so that's a must hold. And if you get a rally in this thing, I'm sure a lot of people would like to see that close from yesterday at 183.24.
All right, 8:59 is here. It's the
we made it. We made it,
everyone. Keep
Abercrombie and Fitch didn't make it though.
Dennis,
I'm like, why do you buy at 20 when it's going to probably go to 19? And then
what's weird though?
It's $18. It lost another $2.
Yeah, but what are some other mall retail stocks? Like Express is not even down. I mean, it's a $2 stock, so how far can it go? But it's not
stock. Retail there. So we can go through them. You got Nordstrom, you got the Gap trading down, Abercrombie or AEO is trading down. I got a small position in that.
Oh, actually,
you got a number of stocks.
Well, I got more for you. So you can look at Urban Outfitters, URBN, that's down 6% this morning.
Yeah.
How's their pizza thing going?
I don't know. Zoomy.
All right, guys, I'm gonna let you guys finish up. I'm gonna go cover these other symbols, pre-market prep plus Triple D. I'll talk to you at the top of the hour.
Here's your list of peers related to Abercrombie and Fitch. There really aren't that many. Oh, American Eagle. Don't they report tonight or tomorrow? One of those days. American Eagle is down 6%. That's notable. Tilly's. I mentioned Express already.
A lot of these stocks have already been killed.
Yeah,
so, I mean, they're getting beat up here again, like
Victoria's
Burlington.
Secret. Yeah, VSCO, Victoria's Secret. Yeah, down. Going to open down this morning. So
a lot of them have already been killed. So maybe you're going to get some seller exhaustion here eventually, but it's sure not happening in ANF so far. It's dropped another $2 since we covered it.
No. Wait, what pizza? Joel was referring to the fact that in like 2016, Urban Outfitters bought a pizza chain, and that was the last I heard of it. 6 years ago. So I'm sure it's going fine. I don't know, actually. I haven't thought about it in a long time. All right, that'll be a wrap for our show today. Hey, do us a solid before we go. Drop us a like. We would really appreciate that. Thanks to our guest, Angie Setzer. I am going to end the show today with a brand new commercial that we've got for Benzinga Pro. That's what this platform is on the screen. It's pro.benzinga.com. Gonna end the show with that commercial. Redirect you all to live trading with Money Mitch, Ryan, and Zunaid. Catch you guys later. Good luck at the open. Try to stay green today.
Introducing Smarter Financial News Search with Benzinga Pro. Now, with an array of familiar screening filters like price, short interest, and PE ratio, you can actually screen financial news for stock trading ideas. But that's not all. On top of fundamental and technical screening for actionable news catalysts, now you can tailor your newsfeed with Boolean operators or, and not. The result is perfect. By your own standards for your own news trading strategy. Prepare for the upcoming rebound. Capture news catalysts before major